Hello guys, welcome to another video. In this video I'm going to be showing you the three main concepts of the ICT, which is the accumulation of the market, the manipulation of the market, and also the distribution of the market. These are the three main concepts that as a trader you really need to know. You should be able to identify it when you see them in the market, and you should be able to trade accordingly anytime you see it. I hope you're getting it right. Now you can see right here in my charts, when you look at this particular area, you can see that there are a lot of liquidity right here. The market actually waits right here to accumulate a liquidity before it starts moving towards a particular direction. Now, looking at it right here, anytime the market is accumulating, the market always range. I hope you're getting me now. This is one of the things you really need to know whenever a market is accumulating. It tends to range. And if you could see it right here, after it has accumulated a particular liquidity the market really wants, then the smart money traders tends to push the market towards a particular direction. You can see right here, they push this market towards this particular direction, which prompts a newbie traders or a novice traders or people who really don't know much about the market thinking that the market is actually what going on this particular direction, which is a down direction. So this is actually a fake out, and it is what we call the manipulation of the market. Those smart traders or these smart money traders, they tend to push the market down towards this area, manipulating the market, enabling the young bid traders or the novice traders to think that the market is actually going towards this particular direction. Now, when the market starts coming down right here, especially when it tends to retrace back here, for those of you that actually tends to trade whenever you see a retracement on a particular direction, a lot of people will tend to enter the trade right here down to this particular aspect. So normally whenever they see a trade in this particular aspect, they'll be so happy that wow, they are actually on a very good profit before the smart money concept decides to take their initial directions which they intended to take. And if you could see right here, you could see that the trade has been going up. So this movement is what we call the distribution. I hope you're getting me now. So here we can say this is the accumulation of the market, this is the manipulation of the market, and this is the distribution of the market. So I'm going to be showing you how you can be able to spot them in a real life trade, and also how you can be able to trade this particular concept anytime you see them in the market. So guys, let's go into it. So guys, as you can see, we spot a particular accumulation in the market right here. You can see the market is actually ranging right here and it's actually accumulating. So immediately we saw that. Let's see how the market play out. You can actually see, let me zoom it in so you can actually see what I'm talking about. You could see that the market is actually accumulating right here, and you can see that smart move that breaks this particular structure of accumulation. Let me actually pull it up right here so you can see. Pull it up right here so you can see what I'm talking about. You can see the accumulation in the market, right? And you can see how the market actually would fake it out by manipulating it, thinking that this particular trade is going on a downtrend or on a downward or a bearish move. I hope you're getting it right. So right away you can actually see a very big candlestick coming up right here. So let's see how the market actually plays out again. So the market actually moves up to this particular direction and came back to retest this particular level. This is how you're going to trade this particular market. Immediately you see this particular accumulation, this particular manipulation, and you can see that this particular trend is where the smart money traders are going. When you see that the market actually break out this particular level and it came back to retest this level, this is where you can actually enter a trade. You can actually take your long position too, and you can actually bring it right here. You put your stop loss right to this particular level, and you can actually take it up to the next resistance level. Let's actually see how the trade played out. So I always advise you, if you want to go into a trade, always have a strategy that will amount to 1:2 or 1:3, at least 1:2 in the market. That will really help you out. I hope you're getting it right. So this one is actually 1:173, which we can still manage for this particular trade. So let's see how the trade actually plays out. Right away you can see this is actually our take profit right here. As you can see right here, the market actually came down up to this particular level again to confirm this particular level right here, this support level right here, and you could see how it moved down to our take profit. So this is how you can actually trade accumulation in the market, manipulation and distribution in the market. I'm going into the charts to identify more of this particular concept so you can be able to know how they play out in the market. So guys, this is another structure in the market where there is an accumulation in the market right here. You could see that the market is actually on a standstill, accumulating more liquidity in the market. So let's see how the trade plays out right here, which will serve as a point of entry for us to enter the trade. So let's see how it plays out. You see right here, there is actually a move in the market. This particular move in the market serve as the word manipulation of the market, because this is not the right direction at which the smart money traders wanted to pull through. So right away, let's keep seeing how the market is going to turn out to be. You can actually see a reversal in the market right here, which changed the direction of the smart money traders. Now, the point of entry into this particular trade, whenever you see this particular trade, is that you allow the market break this particular level. Let me actually bring it out so you can see. Allow the market to break this particular level, either this level right here or this particular level or this particular level. Once the market breaks through these particular levels and tends to come back as a retest, that is when you can actually enter this particular trade. So let's actually keep seeing how the market plays out. So you can see that the market actually breaks this particular level and this particular level. If you look at this particular level right here in 5 minutes time frame, you discover that the market came down right here and retest this particular level. Immediately you see this particular retest, what you have to do is to come right here and take your short position to, going to take your short position to, and you're going to enter the trade right here. You put your stop loss right at this particular level and you take your profit to the next support level. Let's actually put it right here. So you can see this is 1:2 of this particular trade. So let's see how this trade is going to play out. So right away, you can actually see we've smashed in our take profits right in this particular level. So guys, this is actually a very simple strategy for you to identify the accumulation of the market, the manipulation and the distribution of the market, the techniques being taught by ICT and the techniques being used by the smart money traders. So guys, I'm going to identify one more of this particular concept in the market, and I will get back to you shortly. So guys, I've actually identified the accumulation of the market right here. As you can see, this is the accumulation of the market right here. This particular market move is paramount to GBP USD, AUD USD, particularly because that is the kind of currency pairs I trade mostly in the market. So right here, we can be able to identify it right here, and let's see where the market is going to move as a method of manipulation used by the smart money traders. So let's actually see how it's going to be. You can actually see this particular move in the market. When you see this particular move, you'll be thinking that this market is going just downward. So let's continue to see. So when you actually see a reversal right here, don't enter the trade anytime you see just a big candle reversing. You get what I'm trying to say? Before you can enter a trade, ensure the market tends to what? Break this particular next resistant level. Okay, let me map it out for you so you can see. Ensure the market break this particular level and come back to retest this particular level before you enter a trade. When you see that the market just pull up right like this and you just decide to enter the trade, definitely the smart money traders can just come and stop you out. I hope you're getting it right. So let's see how the market plays out. And you can see right here, there was actually a long candlestick. This is actually another form of manipulation by the smart money traders to actually place out people that is actually predicting their move in the market. Let's take for example now, you actually enter a trade right here. Let me take my long position too. You actually enter a trade right here. You put your stop loss just right here, and you enter a trade when you just see the candle pulling up right here, and you're actually aiming probably the next resistant level just right here. Immediately you actually enter this particular trade, you could see that the smart money traders actually come out to stop you out. So before you enter a trade, ensure it break this particular level, retest it before you enter the trade. So let's see how the trade plays out again. Now look at it right here. You can see that the market tends to break this particular level and what came back to retest this particular level. This is a good moment when you can actually enter a trade. So immediately you see this particular trade, what you just have to do is to take your long position two, then enter the trade right here and put your stop loss just at this particular level. Then you can actually enter a trade just right here, and you can aim the next resistant level just right here. So this is actually 1:2.38 right here. So let's see how the trade is definitely going to play out. So right away, this is actually a trade that is still going on in the market. This is actually a trade that I'm taking today, Friday, 10th of May, 2024. So this trade is actually going on right here, and definitely the trade is definitely going to come up to this particular resistance level before it changes the movement. So guys, if you like this video and you really understand whatsoever I've taught you in this particular video, do ensure you hit the subscribe button so you can be part of our members. Ensure you like our videos. Comment any of those explanation you don't really understand in the comment section. I promise I'm going to give you 100% attention and a good answers to it. So guys, this is where I'm going to stop on this particular video till I see you again in the next video. But I always tell you one thing: never give up in forex trading. It might actually not be smooth at the beginning, but trust me, when you continue in that particular position, when you have this particular energy and you are being optimistic in trading, trust me, a day is coming you're going to be very profitable. Trade carefully and always know when to enter a trade, what you can be able and willing to risk in the market. So guys, till I see you in another video, keep trading and keep working hard. Bye.